Volatility is exactly what we continue to see. 2023 has been absolutely, in a word, volatile. We've experienced probably the peak of it so far with last Thursday's SVB bank narrative, with the regional banks under a lot of pressure. But even before that, 48 hours before that news hit the market, we had Jerome Powell at the Humphrey Hawkins testimony day one in prepared statements tell the market that we're going to hike higher and faster. We had a lot of vulnerability going into that SVB story on Thursday. So where does that leave us? Well, I think the first thing we have to remember is, what is our time horizon? They continue to shorten, but I'm not necessarily advocating day trading here, gang, although that is something that I think is an important gear for all of us to have. In this environment, the window really is tightening down to about 1 to 3 days. Short-term swing trades. I'm Raghee Horner. If you're not familiar with me, I am the lead trader over at Simpler Futures, as well as the Sector Secrets Mastery. And what we're talking about here is measuring volatility using daily price movement ranges. We're talking about looking at a historical volatility study that looks back over 6 months of price action to plot where support and resistance based on volatility is likely to be each and every day. So we're taking a look at the 1 hour chart. So the first thing we talked about is 1 to 3 days. That for now, at least until March 22. Now, why that date? That's our next FOMC meeting. That's going to be the plan. 1 to 3 days of follow through. Anything beyond 3 is a gift. 1 to 3 days of follow through using 1 hour charts. So this is what we're basically going to be doing. Minimizing the size of the daily here just so we can get an idea if the daily is overbought or oversold, if it's in an uptrend, downtrend, or neutral sideways market, and then taking the DPMRs, putting them on the 1 hour chart and saying, where are the zones? So let's talk about where these zones are. Now, when we take a look at Monday, you'll see the zones just absolutely squished up. What does that tell you? That tells you stay away because we are exceeding historical volatility. It's a really good warning, right? So Monday was very, very difficult to say we had clarity in the market because so much of the expectations going into Friday's close were for a margin call Monday or for some sort of really massive sell-off. And that's ultimately not what we got because Janet Yellen went on Face the Nation Sunday morning and said, we've got this covered. Whether or not that's true remains to be seen, but the market breathed a slight sigh of relief. And that's exactly what we've been seeing since the Monday lows around 8 a.m. into Tuesday's close. We're up overall in direction. The problem is, are we going to follow through on Wednesday? Are we going to follow through on Thursday? Well, that all depends on where we got long or short from. If we're breathing a sigh of relief, we're focusing on support. And support means the lower or gray section of the daily price movement range. And you could see hits like this, hits like that. That is where we want to position ourselves long, right? So the zones just wait here until price comes to them, right? The whole idea is to have this already waiting on the chart with the Globex session, and then we wait for price to reach either resistance or support. That's the idea behind a daily price movement range. Let's look at this same thing. 1 hour time frame, 1 to 3 day time horizon between now and March 22 on the S&P. Again, on the NASDAQ. Again, very tight ranges, very difficult Monday. But if you take a look, what did Friday do? At least Friday hit the bottom of the range. What did Tuesday do? Here you are, once again, hitting the bottom of the range, setting up perhaps at least 1, if not 2 to 3 more days of potential upside, right? That's what we're trying to capitalize on. Now, it's not just the long side we can look at. Let's take a look at energy, right? Energy had a pretty darn good day today. Interestingly enough, energy is in a neutral daily time frame. That means that we can look to the long or short side of energy. Furthermore, energy Friday, Monday, and most of Tuesday, take a look at this red lower multi-trend. This is a downtrend, gang. We keep it color-coded. When the lower row of this tool is red, we focus on long puts or shorts only. We've done this 2 days in a row now. Short, follow through to the first target. Short, follow through to the first target, follow through to the second target. The trend being red tells us we need to focus on resistance, right? So it's always going to start with what's the path of least resistance. The multi-trend tells us that. Then where do we engage the market from? Daily price movement range, daily price movement range. Now that we're neutral going into Wednesday, we could look for the long side of XLE because now we've gone neutral. Neutral, as you can see here into the close, set up perhaps a 1 to maybe 3 day window. Now notice both of these trades were in that 1 day window. If I'm expecting the market to move 4, 5, 6 plus days in my favor, I'm going to be right now, at least between now and March 22nd, probably very, very disappointed. But if I keep the 1 to 3 day short-term swing trading window in mind, I'm going to be able to deal with the current environment really effectively. Let's look at the example we're all thinking of. Okay, Rod, great. I can see it works in XLE and the S&P and the NASDAQ, but what about really volatile corners of the market? If this thing can capture volatility, let's see what it does with the XLF. No problem. Let's do it. First of all, start at the bottom of the chart. What is the trend? Gang, look at the color of the lower row. This is the multi-trend. It is down, right? So what am I focusing on? Shorts. Whether those be mean reversions to the wave or whether they be shorts off resistance. This is the yellow zone. So the yellow is resistance, the gray is support. Doesn't matter. That's going to be, we already know which direction we need to trade XLF in. Either short the ETF or get long puts. All right. But what about now? Okay, Rag, that was then. What about now? We've gone neutral, haven't we? Neutral does open up the fact that daily XLF is, and so let's take a look at the daily here for a moment, because it's not as if the daily is not important. It's just not going to be the best time frame necessarily for that 1 to 3 day window that we're going to be deploying until March 22nd. We're above the 200 propulsion. We are oversold in a neutral environment. That's more bullish than it is bearish, gang. Okay. Today, as we wrapped up the Tuesday session, we went neutral, got down to the gray area of support. And interestingly enough, I love using a slow stochastic. Here we are at the midline. The midline's a pretty interesting line if we're looking for continuation. That is what we're looking for into Wednesday. And those are the zones we're focused on. Look at the underlying trend. Let the underlying trend tell us whether support or resistance is what we want to do. This is how I'm doing it, gang. This is how we're managing volatility, changing the time frame 1 hour, changing the time expectation, the time horizon 1 to 3 days, at least until we get clarity from the Federal Reserve about what comes next with rates. So this kind of trading is what you're looking for in terms of answering the problem to the volatility, measuring it and then trading it. Tomorrow starts the live trading for my DPMR masterclass. It includes all the indicators that you need, the DPMR toolkit, as well as a subscription to the DPMR itself, right? You can check out all the details over at simplertrading.com/masterclass. The class has already been recorded. We've got 2 resource videos where we have a tech session that's been recorded, as well as a platform session on how I use TradingView and Thinkorswim as a trading partner to be able to monitor these types of setups on the 1 hour, even when I can't be in front of the chart. Remember, gang, this is not day trading. This is really short-term swing trading where I can place alerts and be notified to when my different levels have been reached and then buy the put or the call, whatever the situation is. So the idea here is swing trading, not day trading, not being glued to the screens. That's not working right now to necessarily be glued to the screens. Too much volatility. Too much drama, right? Drama, volatility leads us to poor decisions, right? So if you want to check out what we're doing tomorrow is the live trading, day 1, over at the masterclass site. I'm super stoked to see you all there. Again, if this is something you think you want to give a whirl to and try, I'm super stoked to see you. All right. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.